Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, February 1st, and got a little bit of news coming up here. So let's take a look at what's on the economic news today. We'll start with the ISM. Came in at a nice little 60.8%, higher than what they anticipated. They thought it was going to go in sideways motion. So basically, stock market's up based on the manufacturing numbers. It seems like right now, since the housing market's been kind of down, manufacturing's been kind of more the savior, kind of helping us out here a little bit. We've been having better numbers, I think, from the manufacturing standpoint than we have. Not that that's huge, but the stock market's really kind of taking it to heart. Personally, I think the construction spending, which is showing a negative number, is what's kind of more important here, just because ISM, you got indexes where you're asking surveys of different companies where you could have small companies, big companies, and of course the big companies could be having good and small companies could be off, and it could offset the numbers there. So of course there could be some discrepancies. So I wouldn't put a huge lot of weight onto it, but construction spending is kind of like, the old expression, put your money where your mouth is, and they're not spending. So a lot of 2 months in a row where we have negative numbers where they kind of contracted on their spending, and we need that growth in construction spending to kind of see where moving forward. So the numbers this week are really kind of looking at jobs coming up on Friday. That's going to be real important. They'll probably look at ADP, and there could be some overreaction to ADP as we saw last month and the prior month. Um, but we also have right now they kind of put the investors kind of put the Egypt issue on the side because it looks like it's they're getting protests, but it's more peaceful. It's not like there's a lot of violence going on right now. So, but something else that came out is Jordan dismantled their basically government amid their protests. They've had protests over there as well, and basically the king Abdullah had basically dismantled the whole government, and looks like they could have a democracy, like a prime minister being elected by the people. So a lot of stuff going on in the Middle East here. Kind of Tunisia kind of looks like they had kind of started the whole process a while back, about a month or so ago, and then kind of Egypt. Now we're hearing about Jordan, so it kind of makes you wonder if it's going to be a trend in the Middle East that's going to happen. And if that happens, of course, we'll have to see how the price of oil goes. That could kind of put some market fluctuations there. So we wish our brothers in the Middle East peace and happiness, and we hope the best for them. So let's kind of move on. Let's take a look at the bond market. We had a huge gap opening here, dropped down quite a bit here. As you can see, we dropped down. We stayed above the 99 mark, which was nice. So we're looking pretty good yesterday. But then also we woke up this morning and started up below 90 and 98. Right now we're at 98.63. So we woke up about 98.76. Or 79 rather, and it dropped further down. So if we can stay above the 98.5, we should be okay, but we really need to get kind of head further. So essentially with this drop, we can't lose any change for a trendward upwards, because now we kind of drop again. So it kind of more or less puts us into a, really when you think about a sideways pattern again. For about 3 months since December, we've been basically going in this sideways pattern for the most part. If we go slightly above it or below it, it's come back within a week or so. So it hasn't been up or below this sideways pattern, and it's been kind of in the range in the 99.5 to 98.5 and to 99.5 range. So it could, we're waiting for some news to kind of break it one way or the other. And right now, kind of expect the unexpected, as my friend Dan Rowett said. So it's hard to predict when you go inside this pattern what's going to break either way. Mortgage rates obviously worsened since the bond market's lower today. So mortgage rates are worsened today. All right, folks, you guys have a great day.